The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 9th marvelous Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a great weekend. Hope you're having a wonderful, fantastic, magnificent Monday. Let's make sure we have an extraordinary day. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I will go take a look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go figure out what the markets are communicating to you and I at about 1 o'clock in the afternoon on the East Coast. And I'm absolutely grateful for your presence here. Now, I'm here to serve you, so feel free to pick up the phone, just like Ben has done. Dial in at 877-927-6648. Internationally, you can call us at 727-445-1044 because this is Magnificent Monday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 200 points. She's trading at 17,707. S&P's down 25 points at 2,074. NASDAQ composite off about 62 points. Russell's down 15. The DAX finished off 172 points to the south. The FTSE was down 58 points. Gold is up about $2. Silver's down 24 cents. Light sweet crude off 32 pennies. How about that Priceline.com? We talked about this on Friday, saying you got to be careful out here for all these people that are stranded. Stranded, what I mean by stranded, I mean stranded from October 30th. October 30th, we had Priceline gap up. It was a small little nuance, but you and I, we picked up on it on Friday in that we said, hey, look, if this thing, because what we saw was the low on Friday was 1430, and the actual high of the trading day when it gapped up October 29th was 1428.42. Slight little gap there. Said, hey, if this thing gaps down on Monday, and boy, did it gap down in a big way, you're talking about one of the most bearish reversal patterns that you can have when it comes to technical analysis, is now at the top on Priceline.com. What does that mean? Well, you've got volume to the downside today. So you've got volume off of the highs, stranding all those passengers on that island. I would not want to be on that island. You've got 1.7 million shares thus far today. Priceline ought to get back. Now, Priceline is already tested, and it's back to this high out here from August the 11th. I would say that Priceline's going to head down towards its next swing point at a minimum. And that would be the swing point from September 29th. That's right around the 1,200 to 1198. Now, in the case of Priceline, this being such a high flyer, in September 29th in our market, in my opinion, that is the key low. It is not August 24th. If we see the markets take out the lows from September 29th, that's going to spell major problems in the market. Priceline may be one of those stocks that get down there, one of those high flyers that get down there and give us a piece of information sooner than later. Hey, let's go out to Tallahassee and speak with Ben. Ben, thanks for calling. Thanks for holding. How you doing this afternoon?
Excellent, Steve. How are you doing?
I'm doing very well. Thanks so much for asking. And you wanted to take a look at the SPYs, the S&P 500. So tell me what you're looking at and how I can help you.
Yeah, I think it was maybe 2 or 3 weeks ago you and I spoke about, from a 401k IRA standpoint, a point to
get into the long
long-term holdings. And I was just wondering if you think this turn might be the opportunity.
The turn being today being the opportunity?
No. Well, whether it's now or if you think it might be some other time before the calendar year.
Well, here's what we have to take a look at. Number one, we've got to really keep an eye. So let's take a look at the SPY, and we'll specifically look at that. Let's take a look at the daily chart. Let's try to get a feel for what's going on. Now, the first place for the SPY to provide you or I with any kind of answer as to what it might want to do is this gap that it had, which was on October 23rd. Now, that had gapped up. Let me pull this over here with a volume of about 144 million shares. You've done 69 million shares so far right now, not you, but the SPYs. That says we're going to do around 128 million shares today. So we're coming into a level where it broke out on lightest volume. Now, volume could pick up from here. It could slow down from here, Ben. I just don't know. But the first test where we're going to find out what the SPYs want to do is probably right around, I'll give you the price point here, 2 price points. Well, I was going to try to, but my system won't operate. There we go. It's going to be somewhere right around 206.30 to 205.51. My suspicion is even if price breaks that level on light volume, we're more likely than not to see a move all the way back to the breakout from October 5th. So my opinion is that at this stage, what the charts are communicating to me, and it's not just the SPY charts, it's like about 11 or 12 divergent patterns that all in the past have suggested that we could see a top, and it could be of significance. It'll be of significance if the SPYs get below September 29th. If the SPYs get below September 29th, then the answer to your question is no, this is not the time to put that money to work. Now, that's got a long way to go, and we have to take things one step at a time. But I don't believe that this is a one-hit wonder with regard to a one-day pullback inside the market. But,
no, I agree with you. Definitely agree with you there.
So, and what I would say is that if I take a look at, let me see if I can find this chart right here. So here's a chart. Let me see if I've got the S&P. So here, if we take a look at the S&P 500, and I'm looking at the cash index right now, it says the price level to be, I would say first we've got about 70, 80 points, something. So we've already done, 27? So we've got another 50 points or so to the downside at least inside of the S&P 500, 50 to 70, which says that that takes us right back to the weekly horizontal trading range potential support level, which is 2016. So I think when price gets down to about the 2016 level, then we'll have an idea. If it gets below that, then it could make a run all the way down to the September 29th low. What we don't want to see, from a long side, I would say if it breaks below that level, because that's a significant low, that would spell that you would see the S&Ps pulling back into about the 1830-ish range out there,
okay.
which is the long-term rising price channel. That would be a gift if price comes back there and holds,
right.
assuming that everything else is okay. But
now,
I think
I'm looking at the SPY on a weekly. Is there something on the weekly that gives you that much negativity? Because it looks pretty healthy right now. Just curious what you see on a weekly standpoint.
What I see is I see a substantial number of divergent patterns that are hidden the most that show that there's been problems on this run up here. But what I don't know is whether this is a top of significance, meaning similar to what we saw in July, the July 20th type high out there. And I really won't know. One day is not going to make I don't think this is a one-hit wonder to the downside. And so I really have to assess this one day at a time. If there were not so many divergent patterns that existed in the market, then I would say, yeah, this is probably just a normal retracement.
Okay.
But they're out there, and they're many.
I'm just looking at the monthly. It definitely looks like, I guess if you use the volume method, it looks like it just went over the August high at 211.31 with, I guess if you project out the rest of November, it could be with a lot less volume, but I guess we'd have to wait and see toward the end of the month, right?
Yeah, I mean, if you look at the swing point from May of 2015, it had 1.9 billion shares. Last month, you were moving up into it. You're still trading inside it with 2.5 billion shares. So
I'm looking at August. Is there one in May that it went over too?
Well, no. In the SPYs, the swing point that I'm looking at inside the SPY is from May 2015, which runs from a low of 206.76 to a high of 213. And that had about 1.9 billion shares is what I'm showing. And last month, you closed inside that, meaning the bottom, which was at 189.12, and we did 2.5 billion shares out there. So it's moving into a swing point. If we're gonna use volume as our only measurement out here,
right.
Then the answer would be yes. I will tell you that when I take a look at volumes inside the ETFs, I say get rid of them, don't use them. They provide you with no accurate trading decision information. Period. End of story. That's when I take a look at the inconsistencies with inside the ETF structures out there. Now there are ways to use volume, but and it's really the Qs that I think are probably the best volume metric that are out there. But taking a look at it's not the thing to hang your hat on as a single.
Yeah. Trust me, I don't. I use your ideas as well as Tom's and Basil's. I try to mix it all together. So,
yeah.
But there's certainly times when this last run up was pretty frustrating. I mean, that thing, it's pretty amazing how high that thing went.
It does. Now, volume when it comes to individual equities is a whole different thing. There, you've got to use volume, or you should use volume, because it just simply has more meaning. Now, and David White's done a lot of work on this, or some work on this, and maybe it does really have something to do with all the high-frequency trading that is out there, and utilizing these different some of these ETFs. But I will tell you that if you were going to use volume on the ETFs to make your trading decision, you'd get chopped into smithereens out there. You've got to utilize multiple. You always have to use multiple tools,
right?
anyways. There's no table that stands with one leg. Well, why would any of the trading that we do stand with one leg as well?
Well, and I think the other thing that can confuse the volume metric is the fact that a lot of these ETFs have different companies represent them at certain times, and how do you factor in the total volume, based on that? Yeah.
The ETFs are really screwy. I've got a friend of mine that does extraordinary work on hundreds of the ETFs, if not more than hundreds. And we were talking probably a couple months ago, and what was odd was that each of these ETFs are supposed to emulate a specific index. And that means that, the SPYs have 500 individual constituents, components within inside it. And as the markets had made some prior tops, he was noticing that the ETFs were not keeping up. Now, not the SPY specifically, but it was some of the other ETFs that were not, they were reducing the number of constituents, even though they were supposed to emulate some other index that was out there, which was really wild. He had never seen it happen. We were trying to find some way to maybe graph it or chart it. But anyways, back to your question, let's see what happens when we take a look at these SPYs. Right now, I think they've got further to run to the downside. Let's see what happens at the 205.51. You close below that, and that says you're moving lower.
Good. I was just going to ask you that. Thanks a lot for that target. And great job, Steve. Keep up the great work.
All righty. That was Ben in Tallahassee. Dow's up 228, S&P down 27. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. I mentioned to Ben that there's a series of divergent charts. There's about 13 patterns that I maintain to help me identify bullish, bearish, or neutral with regard to the market. There's also topping and bottoming patterns that I use. I've got 10 of those that I keep track of. Out of the 10, just so you understand, coming into last week, out of those 10, 8 of those 10 had bearish signals, bearish divergence, bearish signals. One was neutral, and one was a bottoming type pattern. So the preponderance of evidence was saying, hey, we're going to have some type of top. Now, is it a top of significance or not? I don't know. On the other divergent type charts that I have, that there's 13. In that case, there 5 of those 13 were bearish, 4 were neutral, 4 were bullish. So it was somewhat, but a couple of those patterns that were inside there were just downright, potential trouble in River City out here. And back to the ETFs, I'll show you just what I was referring to with regard to you cannot use the volume inside these ETFs as your matrix for making decisions. If you did here, just as an example, the IWM on on September 17th, volume of 50 million shares. Closed over that swing point on Friday with 35 million shares. That's after rejecting it a couple of different times. Once you close over a swing point, even if it's with light volume, typically you end up going higher. In this case here, we're backing off. Volume today, 17 million shares. Inside the IWM, here's what it will communicate to you. Let's see here. Let me move over to this. So the IWM right now is done volume of 17 million shares. Says that it should do about 31 million shares today. That's after going up with 35 million shares on Friday. That would be saying, hey, light volume pullback ought to move higher out here. You've got to use other patterns out there. Let's go to Nashua and speak with Lou. Lou, thanks for calling. Thanks for holding. How you doing this afternoon?
All right. Fine, Steve. How are you doing?
Excellent. Thanks so much for asking. And are you in the SQQQ trade?
No,
Are you looking?
No, I'm not. I was looking to get in SQQQ.
Okay. So if we take a look at that, that's a short position for the Qs. The first thing that I'm going to do because you're looking for what? Should you get in now? You're looking for. Tell me what you're looking for.
That's right. I was wondering if it's not too late to get in.
Okay, so let's take a look at it like this. The first metric that I want to go take a look at with you is the VIX index, which really is taking a look at the S&P 500, the volatility inside the S&P 500. Today's one-day rate of change is plus 16% as we speak right now. Now, here's what I can tell you. If at the end of the day we have a greater than 10% one-day rate of change, that means a 10% above Friday's close, you've got an 80% possibility, 80 to 90% possibility of a bounce within 24. Typically, it's 24 to 48 hours out there. And then that being said, that would say that you would get a bounce that you could sell into. So that's one thing that I would take a look at. If we go look at the SQQQ itself, let's take a look at that, SQQQ. And let's take a look at the daily chart out here. And this is the triple ETF. Let's go ahead and put up our market profile, see what we have. There's two ways that you could trade this, because things don't always have to work the way that they did. But if you look at the SQQQ, this created a new daily market profile box two days ago. And today it found resistance at the top, which is 1887. The actual high today was 1885. So here's the deal. I would say ideally, your best buy on this would be, at this morning's low of a bounce, would be a move over 1887. Would be, so what I would say is if you want to start a position inside the SQQQ, maybe break it up into 2 or 3 different positions, so that it's a scaling position. And if it takes off, after you've got one position, if it takes off without you, then so be it. At least you're into a trade. Your stop in this case here, I would think, would be lose somewhere below 1763 today. So it's a $1 stop. So let's do the easy math on this. If you got in now, as an example, on 10,000 in trading capital, you risk 1%. That would be $100. And you'd use a $1 stop in this case. That says you could buy 100 shares. So you break that 100 shares into, maybe 2 or 3 chunks out there. So you could buy some now. You could buy some at the price point of about 1840, and then the final would be at about what did I say? The low was 1763. So probably about 1775, something like that. And then if you see a close below that low of 1763, we were wrong on the trade. That's how I would take a look at it.
Right. Okay, that sounds good.
All righty. That was Lou in Nashua. That was taking a look at the SQQQ ETF. Right now, we got the Dow down 213, S&P up 26. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 220. S&P is down 26. Now, when Lou was on the phone, we were taking a look at the SQQQ, and this really applies to anything that you would trade out there. There's really only one thing that we can control when we are trading and investing. Only one thing, and that is the amount of risk that we put on the table out there. And it's really cool. It's once you understand the math formula, there's no great science to it. But once you understand the math formula, which really all that the math formula does is it provides you with the most important element in trading and investing. That's called proper position sizing. If you do that, if you have the proper position size, you will be in this game. No, whether it's short-term or long-term, you will be in this game forever out there. And what he and I did was just something simple. We just looked at the SQQQ chart, and we just said, hey, let's go ahead and put a stop below the low that was out there, which was like $1 away. Now, the real stop should be some type of, so a tighter stop, look in really volatile markets. This is what people think. And you know how things are usually counterintuitive. Well, this is a perfect example of counterintuitiveness working big time. many people would think that, I know that not you, but many people would think that in a volatile market, you should use a tighter stop. And nothing could be further from the truth. Because you see, every instrument is going to move up and down, an average. And we take a look, I like to take a look at the last 2 weeks average, the last 10 days average out there, the average true range. In the case of the SQQQ, I can tell you on average from high to low, it's moved 47 cents. So your stop under every circumstance would never be less than 47 pennies from where it is that you would enter. In fact, it would be some type of Fibonacci expansion of that, 1.272, 1.618. In this case here, we used a dollar stop, so it's 2.0. That's fine. It's just a fewer number of shares that are out there, but at least you have the right stop that is in place. And therefore, as more information is released to you, you can go ahead and exit the trade at any point in time. It's like, you did blackjack. Imagine, you put your bet on the table, you see your cards, and then you take back your bet out there. That's in essence what you're doing. Or maybe you just have to take a portion of that to give to the dealer. But how many of you would play that game if the dealer, your cards are upside, or your cards are only you can see them, and you get to see, at least one of the dealer's cards. If you see a face card or a 10, what are you likely to do? That's really what the market is doing out there. So remember, position sizing, and it's very simple. You just take your 1% of your trading capital. In this case here, I just use 10,000 as the example. That's $100. You take that $100, you divide it by your stop. In this case here, we used $1. It was 50 cents. It would have been 200 shares, per $10,000 out there. And then you just simply, to try to come up with what the exact price might be, how much of a pullback. One of the questions was, hey, can I talk about, the VIX index, which we did. I just simply referred to it. We saw that it had a one-day rate of change so far of 16%. I can tell you mathematically it doesn't always happen, but the probability, 80% plus probability that you're going to see some type of bounce. Now, that bounce really takes place or can take place inside overnight trading, inside the ES Mini. So it may not be much of one whatsoever out here. But when something is moved like it has today, best to just simply scale in to a trade, have that trading strategy ahead of time out there. Have both sides covered. What we didn't talk about is where would you exit the trading strategy inside of SQQQ. And I would say at this stage here, I'd go ahead and put the exit at right around the 2066 ish level to 2267. That would be the initial target, and then I would make adjustments along the way. Easily, this could get back, into the 27 area, but you got to take things one step at a time out there. I had another question that said, would I take a look at natural gas, oil, and gold? So let's take a look at all those. Natural gas. And I was getting ready to pull the trigger on this morning for clients, but I held off on it. If we take a look, and you and I looked at this on Friday, so it was a little bit of a giveaway when we did the show on Friday together. And what we were noticing, because I can't recall if it was a caller, if we just looked at it, but on Friday, oops, let me turn this off here. Too many horizontal lines, and we won't be able to see what it is that we need to look at. Now, if we take a look at Friday, we saw price move all the way back right to a level where it broke out. We looked at the highest volume bar, which was right here at about 10:30 in the morning, between 10:30 and 11 o'clock in the morning on November the 5th out there, right around the $2.31 level. Price pulled right back to that area. And as we were looking at it, we noticed that price had also just made a 100% move. So, kind of a double-ish topping pattern out here. And this morning, price pulled back. So at 8:30 was pulling right back into that breakout area. But the problem is, getting type of double top. It's not a double top. It's only a consolidation unless it breaks through the bottom swing point out here. Well, it did break through that swing point at 9 o'clock this morning. You closed below it. So I said, nah, I don't want to do that. Now, what price has done out here inside natural gas, and I'm watching it, natural gas has pulled back to really where it really broke out, which was on November the 5th, right around 7:30 in the morning, between 7:30 and 8. It looked like maybe it would get down to about 226 out here. So with regard to natural gas, if you were going to take a trade on it right now, what you could, what you don't want to see it do is close below $2.26 out here, because that's where the real breakout that we've seen take place here recently occurred. If it could hold that level, then that's pretty good. If I go back to the daily chart out here inside of natural gas, what will I do? I'll wait. I'll be a little bit more patient. we're already leveraged up on the short side of the market, so I will just simply wait. If I take a look at profiles out here, TAS profiles, let me see if those pop up on my screen, daily and weekly. I'd probably wait to give it a shot at around, see if it can hold 223. So if it can get down, test the 223 level, or if it starts to move higher from here with some accelerated volume, then that also would be a buy. So it broke through that one level of support, and that made me just kind of shy away. So that's what's going on inside of natural gas. Question was, would I take a look at oil? If we take a look at light sweet crude, right now that's trading out at $44. Now, in the case of light sweet crude, this has really pulled back into its consolidation. And if we take a look at it, it's actually tested the swing point out here from the trading day of October 27th. So that swing had about 300,000 contracts. You've done 448 right now. So you're pulling back into that level. You're pulling back into a level of support with some volume. So if you're looking to go long to play this kind of trade, I would say somewhere between the price point of 42.76 to 43.50 ish becomes your level. If we take a look at the USO, one of the ETFs that you can trade, let's look at volume here. So you had 26 million on October 27. You've done 16 already. So yeah, it's coming back with a little bit too much volume. So it looks like light sweet crude wants to trade back to, let me put this back up on my chart out here. Looks like light sweet crude probably wants to, well, if it closes inside of 43.91, it'll likely go test 42.58 out there. 42.76 is the is the weekly unfair low. That would really be your area to buy. And if it fails, if it closes below that, then we're all the way back down to the August 24th level. That is in light sweet crude. With regard to gold out here, if we take a look at gold just simply is on pause. Gold is still trading inside the swing point from July 24th out here. I believe that gold is going to pause here for a while, maybe a few days, maybe just trade sideways, maybe a little bit of a bounce out here, and then it's going to, for whatever reason, it's going to let loose to the downside again. Now, what we want to be watching is the July 24th swing point. If we close below, if gold closes below 1073.70, where is this thing headed to? Let me see if I can put a weekly chart out here. Let's see what happened for the week. Maybe we'll go take a look. Let's take a look at the GLD. Actually, here it would be just a simple. I use just a simple A to B equals CD tool, and so that would say inside of gold, I would use the conservative one. I would just simply use the high from May 18th, the low from July 20th, the high from October the 12th, and it would say gold would get down to 987 to 1031. And that probably is realistically where it is headed anyways. But from it always depends on your time frame horizon for trading. Expect and anticipate that gold should pause out here, pause to bounce. But it's not one where I believe that gold is put in any kind of low out here. If we look at silver, we can see that silver is also trading inside a swing point from August 26th, continuing to move lower here. But its timeout is due as well. It's trading down at the 0.786 retracement level. If we look at the SLV, we're probably going to see that prices pulled back with light volume, but I wouldn't touch it with a 10-foot pole. 5 million shares into the trading day of September 30th. Today you've done, oh man, that's painful. It's already done 4.9 million shares as it comes back into a swing point from September 30th. Now you had 12 million shares all the way down here on August 26th. It says that silver's headed down to the lows out here. But it should be in some type of a pause inside of the marketplace out here. So that's what's going on there. So I've covered natural gas, oil, and gold. I think I've gotten to pretty much just about everything that had been requested out here. So let's go. We looked at Priceline. Let's take a look at some other things that are moving. Let's go take a look at things the upside and the downside. Let's see what's moving to the upside out here today. We've got a couple of pharmas. You've got Alnylam Pharmaceuticals out with numbers. Looks like revenues of $6.3 million versus $11 million from last year. Wow. And this thing's moving higher. So what are these guys doing? Buying back stock or something like that? They're loss widened, so they must be doing something out here. In any event, it's moving higher. This thing had gapped down with volume of 2.8 million shares. It's on 872,000 shares. So just looks like this thing is headed back up to the resistance zone somewhere around, it's actually really there right now, which is the top of August 7th, which was 110. If it can close above 110, no reason that I can't get up to about the 119 area. Volume, though, is light compared to where this had gapped down. Little Fuse up $6.74. Looks like they are being acquired. Let's not take a look at them. Plum Creek Timber, what are they doing? Combined Company Warehouse of Plum Creek. It looks like that is also some other merger, so we won't take a look at that. ISIS Pharmaceuticals. I don't even like, these guys ought to just change their name out there. I know they had it first, but this thing is moving higher. It's got good volume behind the move out here. Where is this headed to? It's an excellent question out here. It's got a volume of 3.4 million shares. It's likely headed back into the swing point from June 11th out here, somewhere between $67 to $71 or so. Ticker symbol there, ISIS. What else do we have moving and grooving? Nothing much that we'll take a look at. How about AutoZone out here? AZO down $15, nearly 2%. This has some 155,000 shares today. That was after making a high on Friday with 370,000 shares. So volume, it's not exactly like huge volume off of the top inside of AutoZone, but AutoZone probably could easily pull back to about the September 22nd level, around 749 to 726.30. AZO is the ticker symbol there. This Credit Corp Acceptance, I think it used to be GMAC. This thing here just looks horrible each and every day. Of course, worse today, taking out a B point from the trading day of August 24th. That had 276,000 shares. You're down with 192. This thing looks horrible. Probably headed down into about the 143 type area. And if I pull it back further to the left, is probably we can find some areas where it would also be headed down to. If we take a look at Stamps.com, now this thing had gapped up, I thought. Yeah, it did. So on Friday, Stamps.com, big gap to the upside. So here's another one. Now, this had big volume to the upside, 1.8 million shares. Today, pulling back with 535,000 shares. But if tomorrow this thing gaps down below 91.07, you'll have an island top at, I believe, an all-time high inside of Stamps.com. Yeah, you would. I don't know if we'll get that price line. You've got that. So that looks basically horrible out there. If we take a quick peek in on the summation index here, for the New York Stock Exchange, clearly below the price oscillators inside the New York Stock Exchange and the Dow. The NASDAQ Composite is the one that's giving the biggest fight. It is slightly above zero out here. So any more pressure on it today, it gets below zero, we'd have everything down below zero, and that would say that it would be first and 10. The sellers would have control of the markets out here universally. Of course, what that says, the composite, just like we looked at the SPY out here, is the first test becomes the gap up right around the high of October 22nd at 49.26.99 to the low of the next day, following day at 49.99. That likely becomes the target for the NASDAQ composite out here. Now, in the case of the Dow, this is interesting as we take a look at it. In the Dow, we can see we had that little trend line off of the May 19th high and broke above it. And now today it's actually testing it. So any close below that trend line, that probably gives us another important signal. Of course, holding it as support just adds to the idea of a bounce tomorrow because of that VIX one-day rate of change. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 214, S&P off 25 points out here. And I'll show you a chart that subscribers and I have been following for a while here. As you know, there was a while when we had that bottom on August 24th, and the top set we've had, the top in the Dow on May 20th. You may remember the correlation chart that I was doing that took a look at the 2000 top and the 2007 top, and things were going along beautifully there. Well, we had this bounce here with the September 29th low to move up to the highs. That correlation basically was thrown out. That came so unglued, so unhinged, so the analog pattern basically just went away. But there was another analog pattern that we've also been following. It looks like this out here. Current slide looks like this. So as you take a look at this chart, now this is the year of 2011 versus the year of 2015, going to the beginning of the year. The reason that I had picked out this chart was because you may remember back in August of 2011, you may or may not remember, that's when there was a whole big problem in Greece out here, and the ECB and all kinds of liquidity issues out here. And the market made a bottom sooner than the August 24th levels, right around August 9th or 10th, as I recall out here. But nonetheless, there was just a simple, huge decline like we saw out here. We can see that this pattern, similar, not exactly the same, because in September, October of 2011, the Dow, this is a Dow, by the way, that we're taking a look at, 2011 happens to be the brown, went on to make a lower low. We didn't see that here inside of our market. But if we take a look at why this right here may be, as I move this little red horizontal line over, right here, well, I guess it's doing it on my there we go. Okay. So even if the market moves higher for the next couple of days, I guess my point is you can take a look at this very steep decline into right around the Thanksgiving time period out here. So I don't, that's not an exact correlation between 2011 and 2015. This is day by day. This doesn't include today's Dow where it's trading at. This is as of Friday's close out here. But there is enough of a correlation for us to pay attention to, and was another reason why when we spoke with Ben earlier, it's possible that this is more than your garden variety correction out here. So we've got areas to be paying attention to. It's not likely that this is a one-day wonder out here. If the NASDAQ price oscillator can get down below the zero line out here at the end of the day, it really does suggest that it is the sellers that are in control of the market, and this could go on for, could actually go on through the Thanksgiving time period out here. On the bullish side, you got to take a look at everything. On the bullish side, I'd say the most bullish thing is taking a look at the Dow and that trend line coming off of the May 19th high, then going ahead and using the July 20th high out there. That's a trend line where we saw price move above it. It's come back. It's testing it right now. If it can hold this level, it would be potentially bullish. Just depends on tomorrow's action inside of the market. So nothing else really to look at that I would think that would change any of our views out here. If we take a look at the euro, just anticipate the dollar is pulling back a little bit. We're seeing a bit of a bounce inside of the euro. Gold not really doing a whole lot. We can see that the euro is still down below significant level of support. That was taken out on Friday. That was the $1.08 area. Unless price gets back up above that area, 105 to 104 is on the way, and that'll go ahead and put strength inside of the U.S. dollar index. Folks, it is magnificent, magical Monday. That means our man David White is up next. Stay tuned for him. Tom O'Brien Show from 3 to 5. Have a great day. I look forward to seeing you tomorrow. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.